Hello, I'm Mike Diarelli, Executive Director of the American Agents Alliance. The Alliance is a national insurance trade association of property and casualty insurance agents. We provide insurance agents and insurance brokers with a wealth of resources ranging from a members-only Fireman's Fund E&O program, access to high-quality markets, an aggressive advocacy and government affairs program, the largest property and casualty insurance convention in the West, and much more. In my capacity as Executive Director at the Alliance, I get lots of phone calls from producers every day. I feel like I'm part Dr. Ruth and part Shall Answer Man. I have an excellent sense of what agents deal with every day in and day out, and what some of their challenges are. Do you see this? This is my insurance license. I believe this license, just like yours, opens the doors to one of the greatest opportunities to build generational wealth for you and your family. But it's nothing more than an opportunity for many agents and brokers who fail to seize it and really grab the brass ring. What is the difference between an insurance agent and a barber? Well, I don't know about all the states, but in California, it takes 1,500 hours of apprenticeship to be a barber. And for those of you that moonlight as manicurists, you already know that it takes 400 hours to become a manicurist. As for us insurance agents, it takes a whopping 52 hours in California to become an insurance agent. The bottom line is that this business has a very low barrier to entry and unlimited income potential. Unfortunately, many agents are stuck in no man's land, unwilling to change, yet wondering why this business has become so difficult. Well, consumer behavior has clearly changed. As we anticipated at our convention 5 or 6 years ago when we said that the cheese was moving, agents have to realize that they have a choice to make. They can either evolve or they can die. It's really that simple. Remember what happened to travel agents? Alrighty then. If all you give consumers is price, you are giving them nothing at all because they can get price faster, easier, and more conveniently online. So please don't take the bait. There is always a cheaper price online. You need to create value, and that means discussing coverage and not selling rate. It means asking painful personal questions, and it means educating yourself and developing professionally. Now let's look at some facts. This past year, 54% of all new auto insurance buyers requested the quote that they eventually purchased via the internet. While only half of those policies were bound online, the internet has become key in the shopping process for a majority of consumers. What do you think has the most influence on a client's overall satisfaction and their likelihood to both renew their policy and recommend you to others? Are you sitting down? It's the day-to-day policy service interactions. It's the very policy interactions that most of us hate to deal with day in and day out. Many of us view sales and service channels as separate stovepipes. In some cases, we steer inbound service inquiries to the sales agent, while some agents refer clients to service centers, and yet others steer service issues to CSRs. Regardless, these views are giving way to a more consumer-centric attitude of servicing consumers through the communication channels that they prefer, not what we prefer, what they prefer. On average, 75% of auto insurance policyholders contacted their agent or insurer in the past year with a non-claim related question, problem, or policy change. These client-initiated service interactions predominantly occur via the 3 traditional sales distribution channels: a call or a visit to their agent, dialing into a call center, or visiting a website. However, a growing number of policyholders are choosing to communicate through multiple channels, and emerging channels like online chat, text messaging, and smartphone apps are now used by nearly 1/3 of all policyholders. In the past year alone, email use has increased 4%, and the usage of smartphone apps, online chat, and text have all increased as well. The service channel that clients would most prefer to use really depends on 2 things: how they first purchased their policy and the service need. It seems that the traditional one-size-fits-all service strategy no longer meets consumer expectations. For consumers who purchase through an agent as opposed to going direct, their agent is still their most preferred channel for most needs. This preference is strongest when dealing with coverage questions, changing vehicles or drivers, obtaining quotes, or discussing price. Clearly, these interactions involve more dialogue between the consumer and the agent. However, a significant minority of consumers prefer to transact via the internet, even for these service needs, rather than having to call or visit their agent. For example, 31% of consumers prefer to add or change vehicles online, and 28% would seek a quote via the internet if possible. For those interactions that tend to be more routine or mechanical, like making a payment, updating of contact information, or ordering insurance cards, the majority of consumers really prefer communicating via the internet. When seeking confirmation that payment was received, consumers prefer the efficiency and the paper trail offered with email. All of this merely tells us what we already know, right? Consumers today are using multiple media channels in their everyday lives, and as a result, are growing to expect their agent to communicate with them via the same channels they use every day. Consumers want the flexibility to be able to choose self-servicing options, but also have the ability to speak to an agent if desired. For instance, when exploring coverage options or seeking explanation of coverage or billing issues. Consumers are more satisfied when their insurer or their agent is able to service their needs when and how they wish to be serviced. In contrast, satisfaction declines significantly when consumers must conform to your business practices or must switch contact channels in order to complete their task or request. This results in lost sales. The effect among existing customers can be less immediate, as less satisfied customers are far more likely to shop at renewal. Consumers most often prefer to talk to a person when they have policy coverage questions. Billing inquiries tend to be a high touch point category, with consumers favoring interaction with a person. While only 31% of consumers indicate a preference for paying their bill at the agency, 45% cite the internet as their most preferred bill pay channel. A strong preference for online bill payment is really understandable though, since 81% of all auto insurance consumers pay at least one household bill online. I know we do at home. More than half of all insurance consumers indicate that they handle credit card, phone, utility, or cable bill payments via the internet. In contrast, insurance payments online currently account for only 30% of the market, representing a significant gap compared to the 45% who cite the internet as their most preferred bill paid channel. This indicates a substantial opportunity to improve not only customer service satisfaction by fully meeting consumers' channel preference, but it is also an opportunity for you to make more money. Consumers tend to prefer the internet or email when the transactions are more routine or mechanical, like bill paying. More than 1/4 of all consumers today utilize one or more emerging channels in conjunction with their purchase channel to seek service, compared with only 16% of agency consumers. Consumers are more significantly satisfied when they deal exclusively with their agent for all their servicing needs, compared to consumers who have had no interaction with their agent in the past 12 months. However, satisfaction is highest among a small but growing segment of consumers who interact with their agent and emerging channels, such as email, text, or smartphone apps. This really represents a significant competitive opportunity for agents that fully embrace emerging communications. Now, these facts clearly indicate a massive change in consumer purchasing and communications behavior. And this gets very complicated by one simple fact. Many agents simply refuse to speak with or communicate with their clients. I've never really understood this. Recently, one of our large carriers in California has taken a rate change, where some folks received a rate increase and some received a decrease. The company provided its agents with a list of every policyholder who was going to receive a rate increase, with the hope that agents would contact their insured to save the business. Oh my goodness, the grinding and gnashing of teeth. I can't tell you how many agents told me, heck no, I'm not going to contact these folks that are getting rate increases. They're mad as hell. Look, that's the value of working with an independent agent, right? We have plenty of other markets to go to if necessary, and that's an advantage to us. In a recent study, although 85% of auto insurance consumers indicate that they are loyal, more than 1/3 of auto insurance policyholders shop for a new insurance provider. That's right, 1/3 of your clients are shopping you, and chances are you're not the one that's really doing the shopping, right? They're going elsewhere. Identifying these consumers that have a high propensity to switch and employing the tactics needed to keep their business is critical. 15% of policyholders defected to another carrier, and an additional 20% of consumers were at risk of leaving. Among the 15% of consumers who defected, only 1/3 intended to switch when they first started to shop. suggesting that we have an opportunity to retain up to 2/3 of all defectors. However, only 30% of defectors reported that any attempt whatsoever was made to keep their business. Not surprisingly, price is the key driver among both defecting and loyal consumers. Why do you think that is? Could it be that all we talk about is price? We grind all the data into the rating engine, tab, and spit out a rate, rather than asking applicants very personal questions and explaining that they need this coverage or that coverage and why they need it. Those of us that actually can and do sell coverage, we call this building rapport, a natural part of the sales cycle, rather than just dropping a price on someone like a hammer and wondering why we're not getting the business. Most agents have simply turned into quote monkeys, reading the menu from right to left, focusing almost exclusively on rate. While retaining consumers starts with providing high quality service, it is also critical to identify consumers who are most likely to switch carriers, and to do so early enough to allow you time to try to salvage the relationship. While offering competitive pricing and discounts is one way to provide consumers who are at risk of defecting a reason to stay, educating them about their policies and providing thorough policy reviews on a regular basis is another key tactic in persuading them to stay on board. Did you hear that? I'm going to say it again for those of you from Rio Linda. Providing a thorough policy review on a regular basis is a key tactic in persuading your customers to stay on board. Additionally, initiating proactive contact with consumers after they initially become clients can prevent them from falling into the at-risk category in the very first place. Here are a few other trends. Consumers in the at-risk category who ultimately remain loyal have been with you for an average of 4 years longer than those who ultimately defect. So, clients you've had on the books for a shorter period of time are more likely to defect, which makes sense. So, nail down the furniture, communicate early and often with your clients, particularly those who have recently come on board. And if you are not dripping on your clients with a newsletter, shame on you. Nearly 25% of consumers with packages, the auto and the home, shop, while 40% of non-package consumers shop. Ultimately, only 25% of consumers shopping for both auto and home defect, while almost 50% of those shopping for only auto insurance switch carriers. If you aren't selling packages, you've really got to do some soul searching and consider a career as a travel agent. Enough said. More than 45% of Generation Y consumers shopped for a new carrier in the past 12 months, compared with 38% of Generation X consumers, folks in that 31 to 51-year-old range, and 31% of baby boomers. Younger clients are more inclined to shop you than older clients, so go out and find Mrs. Robinson to insure. She's not going to leave you as easily as somebody younger. As consumer preferences and interaction behaviors continue to evolve, agents must be prepared to evolve their strategies. Consumers today can no longer be pigeonholed with a one-size-fits-all approach. Consumer expectations are being reshaped by market forces beyond our control, whether through the emergence of new technologies and devices such as the iPhone, iPad, Twitter, or Facebook, or through changing servicing dynamics. Ultimately, every agent will recognize what we have discussed today, as 41% of all recent cell phone purchases were for smartphones, and that number will continue to increase. Ultimately, it will come down to consumer choice. Today, that choice is rapidly expanding to include a variety of new self-service tools and interfaces. Our industry has shifted from redirecting consumers to their sales channel for service to migrating them to the internet for cost efficiencies, and more recently, opting instead to give consumers the freedom to choose how they want to interact with us. One positive outcome of this freedom of choice is higher consumer satisfaction, which may lead many satisfied consumers to blog, tweet, or otherwise message to friends and colleagues regarding their positive insurance experience with your agency, which may shape future purchase decisions. I hope that this was helpful. Thank you very much, and if you need to reach us at the Alliance, you can find us online at www.agentsalliance.com. Thank you.